welcome to all ladies and gentlemen watching Smart 24 TV. This is the financial markets with me, Nampija Gloria Christine. This time around, we're going to go into the trading terminologies in the different financial markets. And you have heard about the various trading terminologies. You've heard about stocks, you've heard about bonds, you've heard about commodities. But do you know what they actually mean? Do you know what they stand for? But before we dive into that, I have a special guest with me, Mr. Chikomeko. You're most welcome, sir.
Thank you so much, Gloria. It's a pleasure once again to be here with you. Chikomeko Rogi, CFO, Dollar Bill Traders Limited, a company that specializes in the financial markets, educating individuals and also private equity. Thank you.
So you could give us a short insight about Dollar Bill Traders.
Okay, Dollar Bill Traders, this is a company that was started by a group of individuals, millennials, that looked at some of the key issues that are hindering actual poverty eradication in African countries. And one of the issues was illiteracy in the financial sector. So what we tried to do was to put up an educational program by the names of My Company, where individuals subscribe and they get to be taught on how actually they can capitalize on the financial markets and also best understand financial management, cost accounting, all these different key areas that have been underrated and where people do not pay attention to.
Okay.
Yes.
Thank you so much. So rather, we could start talking about the stocks because many traders understand stocks by the heart. In fact, you could be a seasoned trader or you could be a first-time trader and just trying to get into this thing. Yeah. So you would want to understand what stocks are, examples of stocks, and how to trade these stocks. Okay. So we could start with that.
Okay, I think I'll first give a definition of what actually stocks are. And these are units of ownership. Okay, units of ownership in a company. This is what shows that you own. Okay? You have a part ownership in a company. Now, stocks for companies can be publicly traded, okay, globally and also locally. Now, to try to give you an insight for the local market, a company can publicly list, okay, its stocks for the general masses in the economy to come in and actually purchase, okay? So they publicly list with an authorized or an exchange.
Okay.
An example in Uganda is the Uganda Securities Exchange or Crested Capital. So a company can go public, like MTN, how they did it.
Okay.
They went public, and actually people could actually go in and buy with as low as also 100,000 Ugandan shillings. And you get to own part ownership. That you're a minority, yes, but you're not a decision maker, of course, because you're just a minority shareholder. Okay? So what you're looking at is performance of the stock. Okay, you're not really going to make a lot of money, or maybe you're not. There is no obligation that you're supposed to get like a dividend at the end of the financial year. Okay, as a minority shareholder, so mainly you're looking at the performance of the stocks that you bought.
Okay.
Okay. Yes, that's it.
So that's the stocks. Could we go into examples of these stocks?
Okay. Publicly listed here in Uganda, you have Cipla. You have one of the biggest performers being Umeme itself.
Okay, yeah.
Then you have MTN, you have New Vision. Okay, these are examples in Uganda here that people actually trade. You also have Stanbic, you have DFCU, and actually to give you just an insight, one of the biggest reasons as to why these companies come in and publicly list, it's so that they try to pull in funds to facilitate their day-to-day activities or for growth. So they publicly list to the general public to pull in funds. People get to. So generally for the global markets, yes, publicly listed companies that are traded. Several. Tesla, you have Microsoft, Meta, several companies.
You have Vanguard.
Vanguard is also listed, okay, but it's a very big player. Okay. It's a very big player. What is actually very interesting is that actually Vanguard has ownership in BlackRock. Okay. And these are two titans
that marry each other.
Exactly. So these are like business marriages. So you have Vanguard owning actually stake in BlackRock, but these are the big titans. I think the biggest assets under management company that holds the biggest funds, it's BlackRock itself, with over 10 trillion management, followed by Vanguard with 8.1 trillion. Then State Street, these are big titans, these are whales. They literally control the markets globally. Okay? So yeah. Also Apple is listed, all of these big companies, they are listed.
So as a trader, or maybe there's a season trader, a new time trader, how do I trade these stocks?
Okay, first of all, the very first thing, I think I also gave this information on the previous show that we had. Education-wise, you have to understand what you're doing. And after that, it's from understanding that you get to find out that, okay, wow, I need to have this information, I need to understand my technical and my fundamental analysis. Okay, what actually moves the markets? What am I going to base on? Earnings of these companies. These are some of the things that push the markets. Okay, earnings. What are the earnings that have come up? The earnings reports. How are they performing? Okay, employment and unemployment levels. All of these things are going to affect the performance of these different stocks that are listed. But as an individual, like in Africa, you need a brokerage, a retail brokerage that is like a middleman. It gives you access to the global markets. So you're able to trade them. You need a middleman. The way even here, in case you're going to be trading stocks here in the local market in Uganda, brokerage, and that is Uganda Securities Exchange. You have Prested Capital, they are there. They're providing that service to you. Yes.
Okay, so that brings us to our next terminology, bonds.
Okay.
Do you understand what bonds are? How they function in the financial markets? We could start from there. Okay.
Bonds, first of all, these are debt securities. They're called debt securities that are issued by companies or the government to the general public.
Debt securities?
Yeah, debt securities. Okay. So what is actually happening, because I really don't want to go really deep into really making it so hard for the general public.
Okay.
I want to keep it as simple as possible. So what happens is you have funds, okay? They are, the companies or the government, they can list bonds, okay, that we're looking for this much, okay? So people privately, they come in, okay, and they purchase. If someone comes in, is like, okay, $1 billion, then he's looking at an interest after a specific time period. Okay, you're looking at an interest, but of course, it's taxed. Okay? It is taxed an income. Okay. You're going to be gaining an income. So what is happening is like you're lending. That's what I call debt securities. You're lending to the government, you're lending to the company. And afterwards, after that period is done, they give you back your principal plus the interest.
Plus the interest?
Yes. So that is what is happening in the bond market. Bonds are very common in Uganda, very common, and the majority of the people that have participated in financial markets mainly do bonds in Uganda.
Could you give us examples of those bonds?
The different bonds that exist currently right now. I cannot actually give you like an actual name, that this is the name that has been given, but there are actually periods that are yes, a period comes out that we're looking for this much from licensed exchange, Uganda Securities Exchange, or you can get them from commercial banks also. You can get access to that information. The problem is that the majority of the people in Uganda, when the only transactions they think they have with the banks is depositing, borrow money from them. But they have these options there. Okay, you can actually go there and looking to invest. I'm looking at fixed deposits, I'm looking at bonds, any of this. Okay, even the foreign exchange itself, you can actually be able, yes, to get an option to trade with them, but you have to really be having some good money.
Yes. So that brings us to the foreign exchange.
Yes, that's my best. I love it because I really measure the company.
Foreign exchange?
Exactly.
Okay.
So what we do basically, the foreign exchange itself, you're having the buying and selling of currencies. Okay. People do it. You want to travel, you need some dollars. You want to go to Dubai, you need some dirhams, so you're buying this, and your people are not looking at a profit. For you, what you're looking for, give me some dollars,
Yeah.
You get.
So you do realize that the general public actually doesn't know that really trading.
No, you don't. They don't.
Because then when you go there to exchange money, that's already trading, that's forex.
Exactly.
And when you bring up a terminology like forex, someone's going to be like, that's really complex. What are you talking about?
You actually even call it gambling.
Yeah, and they're already doing the gambling.
It's really absurd. Okay, the thing is that you look at, they're coming, what is the purpose? If I'm to go there and I'm going to travel, okay, the purpose is that I'm trying to fulfill an incentive that I'm going to travel and I'm going to need that foreign exchange. Okay, when someone is going to go there and what they're looking for is they're trying to make a profit off saying that, you know what, let me buy the dollar. The dollar is low, it's at 3,500. So when I open up a dollar account, I go, I purchase some dollars, I keep them there. The dollar will maybe it will increase, the exchange rate will increase from maybe 3,500 to maybe 3,800. Okay, now there are those people that trade like that. That is like actual physical trading. Okay, you're getting some dollars, you're keeping them in a dollar account, you bought them at a specific rate, you're hoping that they will increase, the exchange rate will increase. Okay, then you have majorly what we do, which is what we call speculative trading. The same thing what banks do. The only difference is that they're doing it at an institutional level. For us, we are babies, we are retail traders. Small money, doesn't matter if you have $1 million. $1 million, you're still a baby and you're a retail trader. Okay? So what you're having is that we are coming to the market for a profit.
Okay.
So I'll give you an example. Banks participate in foreign exchange in two ways. They do spot trading and they do speculative trading. Now, in spot trading, you're actually having buying and selling of currencies between each other. They normally have large transactions, and maybe there cannot be one bank that has been able to get that transaction cannot fulfill that obligation. So what it does is that it will go to another bank, maybe borrow or buy from that bank. Okay, so they are having exchange between each other in business, exchange and a spot trading.
Okay.
Then one which makes them some very good money that enables them actually to be able to consistently be able to finance different projects of the general public is speculative trading. Now under speculative trading, they are going to be making a profit off the changes in the exchange rate. So the margins, those changes, the margins, okay, they keep on making a profit off that. Exactly. So even that's what we're doing at a low scale. Now remember, for them, it's an interbank. That's what they call it, an interbank market. It's over the counter. They don't have to go to a physical location. They are electronically connected. It's an interbank. Now for us, that's what they call it, over the counter. For us, we're looking at, we need still a broker that is going to give us a platform where we're going to be trading from. An example is Light Finance. This is one brokerage that we're in business with, helping them with business development in East Africa. So this brokerage gives you access, a platform where you can actually deposit your money, which will turn out to be the equity that you're going to use to actually trade. So even as you're looking to make money off the change of the exchange rates, okay, up or down, it doesn't matter. We still make bank on it.
Okay.
Yes.
So let's get into the commodities.
Okay.
We have heard of gold, we've heard of more, we've heard of wheat, oil.
Yes. There, I know it's that side is quite complex. Because people are wondering, okay, when I talk about wheat, soybeans, maize, I know I get my physical maize, I buy. Or I sell, whatever, the actual physical. Okay?
Exactly.
So when we talk about commodities, you're having actual physical goods that are being traded, grouped into three. And under metals, you're having gold, silver, all of those. They are traded on different exchanges. Then you have energies. You have crude oil, natural gas, also being traded on exchanges.
Okay.
Then you have agricultural products, wheat, maize, soybeans, even cows.
Even cows?
Yes. So what is happening here is that we are trading derivatives. I believe this is also something that we are going to look at. Not in depth, but maybe give an insight. So you're trading, you're making money off the change of the price of that asset, that underlying asset, that specific asset. So if the price of gold per ounce is 1960, maybe 1960, 50, the change of that price is what we're going to be trading. It's not that I have the actual physical gold somewhere stashed up somewhere. No, we're going to be trading the change of the price. I'll give you an example of maybe an exchange rate. If we're having maybe say an exchange rate of maybe say Euro USD 1.2300 being the exchange rate of the Euro USD. What we're going to be trading is the change of that exchange rate. Let me say it goes up, okay, or it changes. So it does not need me to actually have some euros somewhere stashed away. Okay, no, I don't need to do that. I will just have to trade that specific price change. Okay, that is where I'm making the money. Okay, I know it's a big dip. And that's why we have the educational program of MyCommand, where individuals are able to go in depth on how to understand exactly. And on how to trade those commodities. On how to trade them, yes. But we normally advise individuals, please, graduate accordingly. Shift from currencies. Not to be profitable on currencies. There is no way you can tell me you're going to shift to commodities such as gold. Some people go in for, you can imagine someone who is doing the industry and they're telling you, I trade crude oil. Because they're all about showing off, you know, that kind of childish play, whereby you're coming in, you're looking at, I want guys to look at me as a big player, I trade crude oil, I trade silver and gold. But yet, the actual fact is that you know that you've never made a dollar, or even a cent from it. You're actually making losses. Losses and losses. Because they're a bit more complex. Why? There are several fundamentals. Fundamentals, I might call them like events, news releases that affect these commodities a lot, that you need to be acquainted with and you understand and you keep up to date. And that's why you see institutional traders have an upper hand over the retail traders. They get first-hand information. So there is that ignorance that is out there that people need to really fight. Understand currencies, then after accordingly. Yes, please. Okay, so could you please go into the bull and the bear markets? Bulls and bears. Yeah. I know people are always seeing actually the t-shirts people put on. There's a bull and there is a bear. I'm looking at a bull market. Alright. So relations with bulls and bears actually. Yeah, they're showing that. The person is trying to directly communicate. I'm a trader. You know, bull and bear market. When you go to Wall Street or Commonwealth in UK, you are having all of these things all over the place. I've actually seen this around. Yes. But I've never connected it to this. What's that? Okay. When you see a bull, it means that these are rising prices. You know, normally the people on the crypto side are the individuals that normally use them. Because what they're anticipating is that prices are rising when they're going to rise. That's a bull market. Prices are rising. You know, we're in a bull market. So I'm going to be making money off these stocks. It's a bull market. You know? Okay. Okay. So bears, the prices are going. Prices are falling. Are there t-shirts too for bears? Of course. Yourself, you can customize one. Yourself. Okay. You know, it doesn't matter. We will make money in the bear market or bull market. It doesn't matter. Prices are going down. Yes. And the bulls prices are going up. Yes. How do I get money from those? How do you make money from the markets going down? Remember what I told you, that when you're trading contracts, which we do trade, okay, you're looking at making money through the change of the price of the actual price of the underlying asset. Okay, so it's not that I bought an actual, let me say, this specific form. Okay, the form is let me say 500,000 Ugandan shillings. Okay. Now I can buy this phone and let me say 500,000 Ugandan shillings, and let me say I'm to sell it off. And to sell it off, I can make money only if someone gives me above 500,000. Okay. 500,000. Okay? Now, there is where I can trade the change of the price of that phone, the 500,000 itself. And that's why it goes deep into lot sizes, then pips, all of those terminologies that we shall also look at. Pips, lot sizes, okay? So that change that is happening, what is the value of that change? That's where pips coming from when you're looking at exchange rates. The pip being the smallest change, okay? The smallest change of that smallest change. What is the value of that change? Now that's where lot size is coming from. That is the value. And for every one change, how much am I supposed to be making? If I choose a standard lot, let me say I'm trading major currencies. I'm sorry that I'm going so deep. I'm trading major currencies. $10 on a standard lot. For every change, changes or falls, okay? 20 times. Okay, so you get that 20 times the $10. Because remember, the 1 pip change was equals to $10. How about 20? That is $200.
Okay.
You get? So it's a bit deep, but of course people these days, they are very literate about it. Guys are researching heavy, especially millennials. Big shout out to millennials out there. They're not sleeping of late. They're not waiting to just be, you know, to just be given away. They're fighting. They're putting in the work and fighting.
Okay.
Yes.
So let's also talk about the equity.
Okay. Equity.
Yeah.
Yes. Equity is how much you're going to trade with.
Okay.
And you're able to put it there and you're like, okay, I'm opening the trading account and I'm now $1,000. And it's what I'm going to use to trade. $1,000. So you plan for it accordingly. What is my risk? If I deposit $10,000, what is my risk daily? 1%. That is $100. Profit targets 3% and above. That would be $300 and above. Okay? In case I go into the market, okay? Can I put my stop loss at an area whereby, in case I say this price is 550, and that is where I entered at. If it drops down to 530, okay? As a museum, so that's where stop loss, there is that tool. It's called a stop loss. It's on the trading platforms.
The stop loss and stop gain.
Not stop gain. Take profit.
Take profit.
Yes.
Okay.
You're looking at a specific price that, once I reach this specific profit target,
You can take
me out. Automatically, you don't have to sit there. You can actually do that to sit there, but I don't advise actually in our classes. We tell individuals actually put a stop loss. Put it there. Put it there.
What happens when I sit?
When you just
And watch with no top loss, no what?
Oh, that is the biggest mistake that people make. And I'm glad that you brought it out. Because most of the people are like, you know what, it will go back in my direction. So what happens is that they eat the equity up to zero. Then you're like, I've blown the accounts. Then you blame everyone. The markets are trash. You can't make money out of it. But it is you. You did not actually follow the risk parameters. You did follow. Just as when you start in any other business. You need to have risk parameters. You have a plan in case things go sideways. But you won't say that I have 100 million and I want to go to goat farming and get 100 million or put it into goat farming. Come on. Now people treat this trading as a casino. You know? They don't really cater for the other side, the opposite side. Why should you think that the market has to go on your side? No, you're just a retail trader. You don't command the market. So you have to understand that you need to put risk parameters. A stop loss and be like, I've put the stop loss and once it's hit, that is 1% of my account, gone.
Okay.
And that's how we're able to do it. Even the banks themselves, commercial banks and investment banks or hedge funds that participate in financial markets, they have stop losses. Price zones whereby, you know what, once you reach this price level, not even a zone, a price level, because it's one specific price that you choose. You choose it. And once you choose it, you need a percentage of how much you take in. 1 to 2% below.
Okay.
So it doesn't matter. You can even lose because if you have 5 trading days, but I lose 3%, 1% each day. Then there are days I'm targeting 3% and above. You can do the math and see that I'm a profitable trader. That's how it is. But people think that when I come to the markets, I just have to be profitable. That is funny, and it's impossible.
So what happens if, let me say someone just puts the stop loss and doesn't put that take gain thing?
The take profit.
Is it possible?
Yes, you can. You can decide not to take profit. Yes, but realize that once you don't put the take profit, maybe you're looking to manually close the trade. You close the position yourself, you're watching and you're looking to close after gaining specific profits. But what the risk is, the market can actually go in a direction, then afterwards reverse back or maybe retrace or retest, comes back, yes, and then you take a loss.
Wow.
Yet you are in profit.
Wow.
Quite interesting. It's quite interesting.
That brings us to the market execution.
Market execution. You're pressing buy or sell after making a personal decision based off what? The technical or fundamental analysis that you've done. So you come in and either buy or you sell. So that is market execution. You're executing yourself. You're saying buy, I'm selling. Any of those decisions, you're executing in the market.
That's all.
Yes, you're not killing someone. I know that's what people think. Execute him. When the term is used in the trading side of financial markets, it means that you are opening a buy or sell position. Buy or sell. Not kill someone.
Okay.
Yes.
So another trading terminology we use is liquidity.
Liquidity. I believe even that is one of the biggest problems we have in the country of late. Not even of late, from the past. The issues with liquidity, the ease with which you can buy and sell off an asset, okay? The ease with which you can easily buy and sell off that asset without really affecting its original price. And what does that mean? It means that there are actual big players in the market. Actual big players that are coming in and they are buying and they are selling these different financial assets actively every day.
Okay.
You need to people need to fully understand that this is one of the biggest issues that we have in the country. That what you're having is that the markets exist, but who are the big players that are putting in large funds and trading high volumes? We're not having that. The volumes that we have are very, very low. Very low. We have a month, the previous months, I think that I got to see on the Ghana Securities Exchange was about $64 million US traded in volume in 1 month. In volume in 1 month. Comparing it to a 200 billion in volume traded on the New York Stock Exchange. 200 billion. Okay? So we do believe this is a third world country, yes, but that it's growing. It's pushing towards that. Different companies are putting in the efforts to try to financially give this literacy to individuals. You know, they're giving this literacy to individuals on how best they can participate in these markets. So liquidity is the ease with which you can buy and sell off these different assets. The ease with which the buyers are there, the sellers are there, ready. I can tell you something. When Bitcoin was at 69,000 US dollars, there were actual buyers that could buy your Bitcoin if you had one Bitcoin at 69. They were there.
When was that?
That was last year.
2022.
Yes, when Bitcoin hit over 69,000 each. Bitcoin was 69,000.
Was that around November?
I'm not quite sure because I'm not an active trader in the crypto space.
Because as per now, there's a rumor being going around that Bitcoin by August is really going to hit off.
That's all.
Yeah, and so someone who didn't buy it before, you've actually lost the chance. It's around $35,000, as we say.
Currently, right now, Bitcoin is around is moving. It's like moving from 28,000 to 29,000. Okay, as right now the current price, it's consolidating around that. Okay, so normally these things are put there so that people panic, come in and you know what, just let me come in, I might miss the actual bull market, or miss the bull market. But have you actually done your due diligence? Have you done your technical analysis and fundamental analysis? I can tell you I am a trader, or also crypto, but not actively and day to day. I'm more of an investor. I invest, I'm looking at 3 years, 4 years and above. Okay, but I have an insight in understanding because I actively day trade Forex. And me, I do believe, once you understand how to trade the foreign exchange market, the rest of the markets, you have them. It's very simple for you. Yes, it's very simple for you. Okay, so the people should not really panic what the market is leaving me, or what. What is your proof? What is your actual technical analysis? You are speaking as a retail trader in Uganda, and you are anticipating that Bitcoin might hit 100K by August, but by January, you shall be in 100K. Utterly ridiculous. What is your source of information? I can tell you the best traders that exist even in the country here. It is because of inside information from outside sources. So you can see what I'm telling you. It's information that you need. I will say it again. The most successful traders that trade, especially crypto, in Uganda,
Okay.
the edge they have is that they have access to connections in the outside space of Uganda. So I'm an individual here that is still guessing when I'm just looking at the chat. It's crazy.
Okay, Mr. Edney, thank you so much. We didn't get to finish all the various trading terminologies, however, we will be back next week with derivatives. We shall be coming back with positions and so much more. So,
Yes.
have a good day.
Amazing.